Hello, and welcome to Quilter Cheviot's Markets Uncut podcast. This is your weekly insight into the topics and trends that we've been exploring for you here at Quilter Cheviot. Remember, so you don't miss future episodes, be sure to hit the follow button on whichever streaming platform you're listening on, or by following #QC Weekly Comment on LinkedIn. I'm your host, Oli Creasey, Head of Property Research based out of our London office, and I'm pleased as always to be joined by podcast veteran Richard Carter, Head of Fixed Interest, and Sheena Berry, our Healthcare Equity Analyst. Good morning to you both. Starting as always with Richard. Last week seemed to be all about central banks. I don't think many forecasters expected a rate cut just yet, but the consensus view is that the next move, when it does eventually come, will be a reduction in rates by each of the banks in turn. Taking all that in hand, should I be at all surprised or maybe even alarmed to note that two of the Bank of England committee members voted to raise rates this month, which is actually more than the number that voted for a cut?
Not really, Ollie. I mean, that was sort of expected. I think also cast your mind back to the last meeting. You had three people voting for rate hikes and none for a cut. And this time it was two voting for rate hikes and one for a cut. So you can see the sort of direction of travel is towards easier policy and a rate cut at some point. But it's going to take a bit of time to get there. And look, labour markets are still tight. There's still worries about ingrained inflation, and those two MPC officials voting for rate hikes are obviously concerned that the job is not yet done. Although I kind of think they're okay voting for rate hikes in the knowledge that the majority is not going to side with them. So maybe they can vote that way and know that actually won't be enacted. But anyway, I think the Bank of England will gradually get there in terms of rate cuts. But it's just, frankly, the data here and in the US is just too strong at the moment to justify it.
I'm glad you mentioned strong data. That leads me neatly onto the second question I had, which refers to the US jobs numbers that came out on Friday. Am I right in understanding that the actual number was about double the sort of expected figure? It resulted in an awful lot of sort of superlative adjectives being used in the press to describe them. And we also, of course, had some comments from Jay Powell about, it was him saying we should only expect 3 rate cuts from the US Fed in 2024. So I suppose the question is, which superlative were you using for those US job numbers, and what do you make of it? And plus Jay Powell's comments, I suppose. Are you changing your views at all on the back of this, or is it all just the same again?
Yeah, well, as someone who's sort of coming from the bond side, strong data tends to be bad for us. So perhaps the superlatives that I was using weren't to be repeated on this podcast. But you were right. It was about double expectations. I mean, there's a lot of choppy data. You always get choppy data, and you can't just look at 1 month, as we've said before. But it's a reminder that the US labour market is still fantastically strong. Wage growth was also better than expected. So, listen, as I said before, it's too early with data like this for central banks to be cutting rates. I mean, interestingly, Jay Powell had his interview over the weekend. That was apparently recorded before the payroll number came out. So you can make of that what you will. But he was basically repeating what the Fed said at the last meeting, that we're probably going to cut this year about 3 times. They haven't changed their tune on that. It's the market that's been moving around in the meantime of discounting probably far too many cuts and now moving back to a more sensible start. So I think for us, it is a similar thing. We will get to rate cuts at some point, but the data needs to justify it, and it just doesn't at the moment. For bonds, with yields where they are long term, I still think they look attractive, but obviously they've got off to markets have got off to a little bit of a shaky start this year.
Well, yeah, sorry, Richard. I always forget which way you look at the economic data versus how I look at it. So the good news, I suppose, is that your calendar for the next week looks a little bit quieter. I had a little scan, and there's some Chinese PMI data today, and again Chinese inflation later this week. Is there anything else that you're keeping your eye on?
Well, the data is often quieter in the week after non-farm payrolls, although we will hear from a few Fed officials as well, apart from the Chinese data. So, watch out for that. But I suspect they'll be repeating the message that Jay Powell has said recently. I mean, I think, away from the data, for me, obviously geopolitical risk is elevated this year. There's a lot of stuff going on in the Middle East. The Americans have been responding to what happened on the Jordan-Syrian border recently, and I think it's interesting, all this stuff is going on, all very worrying, but at the same time for markets, actually the oil price is not really going up on the back of it, because there seems to be a slight lack of demand for oil, and OPEC seems to be pumping beyond their official target. So I think we always worry about geopolitical risk, but as I say, for now, despite everything going on in the Middle East, it doesn't really seem to be impacting the oil price, and that's good. That's good news actually in terms of inflation and bond yields.
Brilliant, thank you. Well, look, long-term listeners will know that whenever I come on here, I can't resist an occasional political question. And you may also be aware, of course, that it was Groundhog Day this weekend as well. So I'm actually fascinated to learn that a small but significant amount of money is being bet by punters on Michelle Obama being the next US president. And I don't know if you knew this, but she's actually got shorter odds than Nikki Haley, who I suppose has the advantage of actually being campaigning for the role at the moment. Are either of those people sort of credible, possible, future presidential candidates, do you think? Or do you think we're just having that so-called Groundhog Day reprise of the 2020 election later this year in the US?
I think base cases will get Biden, Trump again, as everybody knows. But there is a huge amount of uncertainty around sort of Trump's legal issues, although obviously Nikki Haley's best placed to take over if he were to fall, but at the moment it seems pretty unlikely that he will, and although she's hanging in there, it's very unlikely that she's going to be the nominee. The Michelle Obama one is interesting, maybe a little bit of wishful thinking potentially from some people on that front. I mean, clearly Joe Biden plans to run again, but we know that he is, how should we say it, not in the spring of his days, and it might be that the Democratic Party wants to find a new candidate as we get closer to November. But I think, as I say, base case is Biden Trump, but a nice shock like that might keep it quite interesting.
That's very politely put. Thanks, Richard. And yeah, you should probably prepare yourself for a variation on the theme of that question a few times in the coming months. But I will now turn to Sheena. Thank you for waiting patiently for that. It's been a very busy week of company reports for you in the pharmaceutical healthcare sector. Just wondering if you've taken the time to add up how many full year result announcements you've sat through the past week. And then I suppose also what are the key themes that have come out of them so far?
Yes, thank you. Yeah, there's certainly a few. I can't give you the exact number at the moment, but yeah, we had a number of healthcare companies report, whether that was, a pharmaceutical company, medical technology, or life science tools. And we're not actually finished yet, so still a few more to come. But what we've seen so far, I suppose in terms of pharma, we had a solid finish to 2023 from GSK, Novo Nordisk, and Merck. But we did actually have a softer final quarter of the year from some of the European names, such as Novartis, Roche, and Sanofi. Although a number of the important key drugs from each of these groups actually still continue to deliver pretty good growth. But within the pharma subsector, 2023 was really all about obesity. And as a result, Novo Nordisk and Eli Lilly were actually the big outperformers in the subsector last year. But what have we heard from the medical technology companies that have reported thus far? We're hearing that patient activity levels are healthy and demand for capital equipment remains robust. An interesting theme in this space is robotic surgery. And companies operating in this space, such as Stryker, has stated that adoption of its orthopedic robot continues. And this will be something that we'll continue to hear about going forward. But just to mention the life science tool space quickly as well, companies here provide analytical instruments and services for research. 2023 was a difficult year for this subsector, and that was due to the macro environment and more cautious customer spending. Companies in this space include Danaher and Thermo Fisher Scientific, both of which reported last week. And it's clear that the headwinds that they experienced in 2023 will continue in 2024, particularly in the first half. So overall, I suppose a bit of a mixture of themes coming from healthcare, really depending on what subsector you're looking at.
Thank you, Sheena. As always, we can't really have a chat about pharmaceuticals these days without mentioning Novo Nordisk and the so-called miracle drug Wegovy, which please correct me on the pronunciation if I've got that wrong. Especially now that the company is firmly at the top of the list of largest European companies by market cap. I'm keen to hear your latest view on this. Novo actually missed target sales of Wegovy in Q4. Call this a blip, or has maybe the potential market size been overestimated, do you think?
Yeah, so Novo Nordisk actually reported a pretty strong Q4. There is obviously a lot of focus on the obesity drug Wegovy, and also another drug called Ozempic, which is approved for type 2 diabetes. Both are very important growth drivers for the group. But as you mentioned, Wegovy actually missed consensus expectations in Q4. And this is really due to supply actually struggling to keep up with demand. And as a result, the group has put some restrictions in place. So Novo Nordisk restricted supply of the lower dose strength of Wegovy last year to ensure continuity of care. And supply is now actually gradually increasing as the group focuses on bringing additional capacity on stream. So Wegovy is now launched in 8 countries, including the US, UK, and Germany. And it will obviously take time to ensure that there is enough capacity to supply the demand. But the potential market size for obesity is significant, and Wegovy, along with Eli Lilly's obesity drug Zepbound, are currently creating a duopoly in the market. But Novo Nordisk is also working on a number of clinical trials, which will help demonstrate the value of treating obesity. So far, we've had some data demonstrating that it helps reduce the risk of cardiovascular events, for example, and we will have an update on chronic kidney disease in due course. There are also other assets in the pipeline being worked on for obesity. So the next generation of drugs really do have the potential to help deliver better quality of weight loss. So Wegovy missing expectations in Q4, it's not really a concern. People are very willing to pay for the drug. And as Novo ramps up capacity and increases supply, we really should see continued solid growth from the drug.
Brilliant. Well, finally, kind of as you alluded to, you're approaching the end, but you're not yet at the sprint finish of your full year results marathon. Are there many companies left to make those announcements? And are there any that you're expecting any surprises from, good or bad, I suppose?
Yeah, so there are still a few healthcare companies to report. I'll maybe just mention some that, we think could be quite interesting. So we have AstraZeneca this week. We will be looking to hear, how the key drugs are performing. So AstraZeneca has some really interesting drugs in the oncology space that offer significant growth potential. So focus will be in hearing how they are going. Eli Lilly reports on Tuesday. The group performed well last year, and they will obviously be focused on how its newer diabetes drug Mounjaro is doing, but also its obesity drug Zepbound. As I mentioned earlier, Eli Lilly and Novo Nordisk are currently the 2 companies dominating the obesity space. We'll also have Smith & Nephew, a UK medical technology company with an interest in orthopedics. So that reports in a few weeks. And it'll be also interesting to hear about how the continued turnaround of the group is going. And finally, we will also hear from animal health company Zoetis next week, where we look forward to hearing about, vet trends and how the launch of the company's osteoarthritis pain product for dogs called Librela is performing. So yeah, I think we'll hopefully hear some plenty interesting updates still to come.
Thanks, Sheena. And don't worry, of course, it will be Q1 as well before you know it. So the fun never ends. That kind of brings us to the end of the prepared questions. So thank you both for those insights. And of course, to all of the listeners out there for tuning in. I do hope you've enjoyed today's discussion. We genuinely love to hear from our listeners. So please do review the show now, wherever and however you're listening. And do please also share it on whichever social networks you prefer to use and tag us at QuiltAchieveIt. And of course, don't forget to tap the subscribe button to make sure you don't miss any future episodes. We will, of course, be back next week, but in the meantime, you can head over to our website, which is www.quiltachieviots.com, and that's where you can read the accompanying market overview, as well as subscribe to our weekly comment newsletter. Finally, you can stay up to date with our thoughts on market news, industry insights, and our upcoming events and webinars on our websites, and of course, those social media pages. And if you do have any questions you'd like to ask one of our experts on our next podcast, simply ask them via the weekly comments page on our website. Well, that's it for today. So thank you as always to Richard and Sheena for your time, and thank you again for everyone who's listening. See you next time.